Now, spinny, spinny. How about now? No. Okay. Fresh re. There we go. Let's check the volume. Yep, there we are. Welcome to the live stream. What's up? It's your boy, the Kinda One. And we did our big end of month, close of month review. But we had an issue with Snowball Analytics here. And it's that Snowball was showing some craziness. Snowball had me in the negative 2000s on a $2,200 account. This red line was way down here. It was crazy. My stuff hadn't updated for realized profits and loss. There was a lot of woohoo going on. And I was going to go in and manually fix everything. But all I did was one last Hail Mary of a sync now. But I was like, well, the only thing that's changed is they paid the dividend for Maxi. Everything else happened like midday or earlier. All of that stuff should have already been processed and sent through. Well, I guess it wasn't. I guess it needed to hit midnight because that's when the dividend popped up to sync. Import, export from here, import to there. Yeah, like that. So now this is mostly correct. I'm not going to, squabble about $1 here or a penny there. That's fine. But the big thing was that I had to go over with pen and paper to find out exactly only on closed moves, right, what my profit was to date, which is $227.01. Now, we explained that already in the previous video. But what I didn't get to show was the real versus S&P. So what we have for growth, we're looking at a 1 month time period because we want to track against the last month, right? Because this is the close of the month. The S&P has put up $98.81, and we have put up $239.62 1 month. We are whomping. We are way ahead. Now that 239.62, my number is 227.01, but remember, my number is only on closed out moves. So what does that mean? It means we collected $123 here, but I can't count that yet because this is still open, okay? And obviously, everything we own is still open. It's not closed. Now, a dividend would be considered closed. I get the dividend, and even if I reinvest the dividend, I'm counting that dividend as a profit. I sell something, okay, that's either going to be a profit or a loss. It's closed. It goes on the book. I close out or reach the expiration date on an option. Okay, once it's closed out, so whether it expires or whether I buy it out, it's done. I can then do the calculation on what the profit is. If it expires, the profit's just whatever the premium was. If I have to buy it out, then the profit, sorry about that, had to move something on the desk, then the profit is the difference between the sell and the buy, right? Simple stuff like that. So I book kept every move on paper because this thing was being all wonky and wasn't showing me good numbers here. So we were just trying to get it for ourselves. We're probably going to keep doing that because that's just good bookkeeping. And my metric on closed out versus open is going to be different from their metric. No, we don't care when Zip. Go away. But now I'm pretty sure that we can mess around and we can look. So basically October 1st, September 30th, October 1st is when I did the first infusion of money, which is only $200. So they get a free month here of head start on us where we had $0 in, where we weren't making anything. So for a 3-month window, S&P was up 380, we were up 476. And remember, they had a 30-day head start. Let's check out 7-day. Okay, I wasn't really expecting this because I've only had the one dividend and we really haven't. I mean, we did a lot of buying and selling, but not for not as actual trades. We did win on every trade. The only trade we lost on, dividends saved us, and we still were up $4. But most of it's small dollar stuff, just resizing and changing up the components of the portfolio. It wasn't like, oh, wow, 40% gain, let's sell for profit. I mean, I absolutely will on a 40% gain, but that's not what was happening. We had an issue with the margin and the account going under 2,000, and then things were haywire, and it's like, you're in a deficit, and I was just like, forget it. As soon as we can, we're moving stuff around. We're getting out of the deficit. We're getting out of the margin. And we're getting a bunch of stocks that are going to grow for the month. So, to give us a little more room above the floor so that we're not having those issues. So we cleaned up the account real quick, and it looks totally different. We still are 1,700 in the yield max because we have a put sold at a 17 strike for Coney. We got a 125 premium on that, which had a 2 cent charge, so a $2 charge off of the $125. So we collected 123 in premium. $2 went to Robinhood, and if we buy, we'll be at a 1580. Yeah, $1580 cost. So that'll be nice. That's a good place to be. And if it's not called, well, we get the 1700 back, and we had the 123 already in pocket. The 123 is already in a variety of stocks trying to make us some money. Let's take a look, by the way. Remember that we were at a super crazy yield of like 80%, 90%. We might have been over 100%. But that was based off Misty having a huge payment, and it was based off... Who else had a huge payment? Misty had a super huge payment of 4. I think Coney had a payment of 2. And Maxi even popped off and had a bigger than usual payment of I believe 2. Yeah, 2. So we had like 3 of them hit really high payments. So that was cool. Now you see 24.64%, which is still wildly impressive. Very good. You see that we collected, because Maxi's in there now, yes, $99.53 last month. Big, huge, almost $100 in a month. All right, here's what Misty sent, 5603. Coney popped off for 1632. Maxi at 847. Ulti at 830. Why did I pass OXLC? Because we don't hold it currently, and this is from the old days. Same thing with Maine. YBTC paid 408. RDTE paid $1.96. YMAX $1.60. QDTE $1.25. XDTE 95 cents. 82 cents for ExxonMobil, but that's not from now. And YMAG has paid 72 cents since we've held them. But we see we were way up here, and we were getting super numbers for the month or for the year. And now it's like, bro, you're going to get like 31 bucks. Well, we're doing something about that. I'll show you that in just a minute. Those with quick eyes probably already saw it. The good news is we got SCHD, and we only got 1 share, and it only pays every 3 months. It pays 4 times a year. It's at a 10-ish% rate, a little like 10.5, 10.8, but it has a 10 to 12% dividend growth rate. And this is the last month paying at this rate. So we're going to get to December, and then January is going to flip over. They're going to raise their rates, and we're going to see that in March when we get paid again. That flip, the last day I can buy SCHD for December is the 6th. So we're going to see. I might have to use some leverage. We might have to buy some SCHD. Again, it's going to be a slow one, but it's going to grow super well over time, both in capital gains and in that dividend. All right, what else? Oh, yeah, right here. See, 11.3 annual growth rate. It's the only stock that is tracking on stuff like that from this group, because everything else is not set. Everything else is month to month. We can look here. Maxi is the estimated highest annual dividends. This should be weighted for the value invested, as we see here. I put in 109.50. It's worth 140.76. So we see there's also a chunk of capital gains growth while popping out good dividends. Up here, we see my yield on cost is 45.91 because I got it so cheap. Currently, the div yield is 35.72. Doesn't matter to me. I got it cheap. I'm at 45.9. And then that's what the difference is here. I'm pointing this out because some of y'all might not have Snowball analytics, and you might want to see what all these different things are. You can do categories, currencies, stuff here. We could do annual payout instead. And here Maxi's showing you. But it will still show you 29.71 from all dividends. So it's comparing them. It's not going to give you the dividend yield now, as in the percentage, but it will compare it against your other stocks. Like here's SPY-T. It's talking about a $27.92 payout, which is the blue line. And then it's saying this is how much is invested, 141. So it's actually the most heavily invested currently. So there's different ways that you can look at this stuff. I like to look at it by the percentage. The much wow. Here's just an easy text form, so you can easily look. Hey, I spent worth 141. Hey, it's up like 33 cents. And hey, it's paying out like $27.92 a year. Good, good, good. Oh, look, this stuff is really low. I might get rid of QQQ. I don't know. Like, I don't even care about the risky part because all of these are risky, except for SCHD. All of these are risky. Although the curves are less risky. But like this particular curve, it's just been a bad performer. But we'll give it some time. We'll see. We'll probably collect at least one dividend. And we'll see if it made any market gains. It's the weak one of the litter, for real. So we'll have to take a look. But it's kind of sad seeing that there's going to be $169 annually, when earlier we were talking $1,200, $1,500 annually. We'd have to go back a couple videos and look. And as we saw, like, that wasn't smoke. We made 100. Extrapolate that out times 12, 1,200. And that was on like a 1,700 portfolio at the time. We have since bumped to 2,000. So, well, what are we going to do about that? We don't want to go too crazy. We don't want to go too insane. But there are currently two plays out right now. One is I've got this $17 put out. Now, in a perfect world, we don't get called. We just keep the premium. At 125 premium on the 17 strike, that was a 7.24% gain for the month, except not for the month. We did that here, and we only have to get here to the 20th. So 3 weeks. 3 weeks. 7, 14, 21 days. Not even 30 days. 3 weeks for a 7.24% monthly gain. That's a huge gain. Still not as good of a gain as we could have got had we been a little more patient. So it's a lesson learned. We weren't patient. We could have had 9% easy, and we pulled the trigger too soon, but still a good deal. So we want to keep doing these put sells. All right, is what we'd like to do. But if I lose, then I have 100 shares of Coney at basically $15.80 a piece. And that's 100 to 220 in dividends each month, or I'll be selling up at 17. So $2.20, $220 and profit the other way. Well, 220, didn't you get back 123 of your own dollars? Yes. So that 220 will eclipse what I got and make it profitable. So super nice. Now, what's the other move? The other move is we're using margin to lock down 100 shares of Ulti. Unfortunately, Ulti has no options game. It has options, ain't nobody using them. And the stuff ain't at any price that I want to mess with. Well, why are we looking in at Ulti? Well, because it wasn't long ago, Ulti was about to have to reverse split because the price was getting so low. But instead, before just throwing in the towel and reverse splitting it, they said, hey, let's make some changes to how we run the fund. So the last, I guess, 2 months, maybe 3, it's kind of turned around. And it's kind of gotten some really good yields, and it's maintained NAV. Not completely, but if we look in the last month, we started at 1014 and we're sitting at 1008. We went up, and then the NAV erosion from the payment, and now we're just a little bit under where it started. Well, let's look for the last 3 months. 1126 down to 1008. Now that's not beautiful. That's not what you want to see. But again, let's do the math. 1126 minus 1008. That is a chunk. You've lost $1.18 per share. So you've lost $118. However, you've made boom, 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 boom. Okay, let me write down 118 somewhere. You've lost $118 in NAV. Not great. We don't love it. But over the last 3 months, you've collected $264.05 minus 118. Boom. You're up $146.05. But also, we have to go back and see what it was 3 months ago. So you paid 1,000. Wait a second. 1,126. $1,126 is what you had put in. Okay, why am I caring about the total? Because we just saw you have made $264.05. $1,126 minus $264.05. You've done this in 3 months. You have 9 more months to get $861.95 in dividends. Then that's all of it. That's the whole price. And any NAV that is left is just profit. So is it going to go from 1008 to nothing before you get $861.95? Now let's divide this by 9. $95.77. So you're probably not going to hit it in 9, but you are probably going to hit it in 10. Because we just looked at the last 3. 83, 82, 98. So yeah, you're probably going to hit it in 10 months. And I highly doubt that Ulti is going to be sitting at nothing. So every time that it has a month like this month, where all you did was lose 10 cents, you are fast tracking. You get a couple of these months together, and that Ulti is almost paid for. I am not going to be reinvesting the dividends in Ulti. I'm going to be using those to buy other more stable stocks. But unless something goes sideways with it, we are looking to see if we can't hold for 12, 13 months and get more out of it than at 8. And we're going to be looking, unfortunately for Ulti, like I said, sell a call. There are no calls above the strike price. There are no calls above the strike price. This is bad. So there'll be no call sellings. We could sell a put, but that would lock this amount up. So here that would lock $1,000 up to get 50. Not worth it. Now 1,100 to get 130. That's interesting. You could squeeze a little more out of that. So let's see what that looks like. 11 minus, let's call it 1.4. It would have to go down to 960. We'll go here. This is what we're looking at. This is the drop. Ooh. Okay. I'm not the greatest at math, so let me pull up some Chat GPT here. Chat. We'll go to the option screens. I sold a put on Ulti at an 11 strike for a premium 140. What is my return based on 20-day expiration? And now we wait for a minute. Chat takes over my blender, makes a smoothie. ChatGPT now controls my microwave, made a burrito. He is switching channels randomly on the TV, and now he spit out a number. Okay, so this would mean for less than a month, I would put up $1,100, and if we quote unquote win, then I get a 12.73% return for my contract. 12.73. That's actually good. And if we lose, I get 100 more Ulti at $9.60. So a little double-edged there. A little double-edged. So that's interesting. Because remember, right now, I'm doing 170. I'm doing 1,700 for 123. This would be so much cheaper. So much cheaper. Now let's look up. $390 is the bid. The splits are too crazy. And then this one's just not worth it. Okay, unfortunately none of these are home runs. I think that is where Coney is better, is on the higher. Because we can take a look here. Trade Coney options, sell, put, boom. 20 minus 4.2 is 15.8. So let's call it 4.3 to be 15.7 to be safer. And then you're pulling down $430 off of $2,000. And you're still going to get it at a good price if you get called. So up here, if you've got the 2,000, it's a good swing. But if say you've got the 1,700, you're going to get the same deal with Coney as you are with Ulti, but you're going to get it cheaper for Ulti. I get to come down here and only put up 1,100 instead of putting up 1,700 for a very similar return. Not return percentage, total return. However, this one is more likely to fall to the strike price, or obviously it's going to be at the strike price, to fall to the price that you would get called on, which was 11 minus 1.496. This could very easily hit 960. But I would very easily take 100 shares at 960, so that's not a problem. Remember, don't sell puts on stocks you wouldn't actually want to own. Don't do that. The only reason we entertain this idea is because worst case scenario, I lose the bet. Oh no, I own 100 more shares of a stock I like. Okay? Now, don't get me wrong. Because we don't have the options to sell calls here, we would definitely be looking to try to offload the 100 for stability reasons. I think 100 shares of Ulti is good in my account. I'm not so sure 200 shares of Ulti is good in my account. We'd have to be up to $5,000 account value before I could justify another 100 shares of Ulti, especially if I'm holding 100 shares of Tony because this gets called. All right, but the main thing, guys, was I wanted to come in. I wanted to talk about some option strategies. I wanted to talk about some returns, and I wanted to show a little bit of Snowball while showing me versus the S&P. We're winning on the week. We're winning on the month. We're winning on the 3 months. Now, let me scare you all, because remember, we got this monstrosity from back in the day. Boo! And this was a decent loss. I got Mark as an IPO. I think it was Mark and FXLV that I got on IPOs, and they both sucked. Whoops. It happens. Other than that, CCLP was a decent $46 chunk, but everything else is like small fries, and then a lot of green. Way more greens than red. Lots so green. Oh yeah, wait. We can look at this now too. Boom. So Maxi and SPY-T have about the same invested in them. NFLP would be the next biggest. Remember, the size of the square is how big. Then the color is showing you by percentage, even though this is showing you by dollar, right? But we can switch that. We can come up here. Instead of total profit, we can do total profit percentage as well. Maxi, Maxi be cooking. And then when you want to look at the ones that you have already offloaded, you just cycle here, and then you're like, oh, look at this. Doesn't really count. They gave me a free one, and I sold it for $1. So I don't know why the realized is 83 cents. I sold it for $1. Oh, looky here. And then you can see the capital gain and the dividend gains, and you can look at it as dollar value. Well, no, this is on percentage right now. You can, this one I like to look by total profit. Yeah, all kind of fun little things here with Snowball Analytics. I say fun. This is a tool. We're supposed to be working with this. Yeah, thank God my other transactions is no longer like 20 billion. We get the dividends received at 99.53. That seems pretty accurate. The 106.79 on realized profit and loss. And then the capital gains of $32.32. Capital gains is what the stocks are currently over the buy price on. And realized gains is the stocks we have actually sold. The profit on the actual sales. Is 106.79 right? How close is that? Maybe. It seems to be pretty close. So yeah, everything seems to be working and in order again. So yay. Oh yeah. I wanted to scare everybody real quick. So what do I mean scare everybody? Give it a moment. Give it a moment. Give it a moment. Oh! Yeah! Oh! And again, We know why that is. That's because of this, and a little bit because of this, and a tiny, tiny bit because of this. So not only do I want to be ahead of the S&P every month since starting back in October, but we also want to clean this mess up. We're down big here. Okay, so it's important for me that not only do I do good since restarting the account, but that we erase this old madness, that we do so well that we actually went from being in the hole to being on top. So this total percent needs to also beat the S&P 500, but this one is going to take a while. There's one, huge head start for the S&P, and two, I'm starting in a hole here. So that's the challenge for me. I don't just want to beat the S&P. I want to beat it all time. I want to go back and I want to fix this. But we can't go back in time, so we can only fix this by doing the right things moving forward. Guys, I've blown this account up once before trying to teach myself how to options trade and then trying to like day trade, swing trade from a cash account. Oh, God, not easy. I screwed up big time, obviously, as you can see. Blew up $1,300. Ugh. Horrible. Stock got delisted. Horrible. So we're here to learn so that we can do better and so that we can improve. Oh, yeah, metrics. Cool. I might not have shown this one a lot. We're almost done. This will be it. Okay, so two things. Something called a Sharpe ratio. It's funny. It requires attention now, even though I made the account so much safer. I used to be way over here. And that was with yield max being crazy. Sortino, way over here. Super good. It's loving it. The higher the number, the better. The S&P is like here and here. So what does it mean? Both of these are different ways of looking at your risk ratio. The greater the reward, the more risk you can have. Yield max is so good. My score is actually down. I'm at 11.726 right now with mostly curve. Okay? Yield max was so good. This was at an insane 88. Like, that's just a stupid number. 88 makes no sense on a Sortino value scale. None. Of course, it was short term, right? As the NAV started eating away over time, that would have went down. But I'm just saying, in short term bursts, whoo, the power that you can have with some of these yield maxes. And it's funny that this is like, bro, the risk is almost not even worth the reward where you're at. I beg to differ. These bad boys have growth, and these bad boys have good dividends. I beg to differ, but that's what it's telling me. And it's telling me not my Sortino, my Sharpe is low. My Sortino is still beautiful. The difference between the two is Sharpe just looks at volatility, period, both up and down. So it kind of punishes you even on the upswing. Whereas Sortino is like, bro, obviously, why would I punish you for the good? So that's kind of the very layman's super low level explanation of the two. Is there anything else cool here? Have I found anything new? Let's click community. Most popular stocks. All right, that's kind of interesting. Obviously, these are all big, very well known. We may be getting into O soon, but I think it's the O. I think I'm going AG&C. I've held both of these before. AG&C was cheaper, so I had a lot more AG&C. I think with the Trump presidency, REITs are going to bounce back a little, and I think AG&C is primed for it. Because AG&C is super undervalued right now. That's normally not what you want to see, obviously. But I don't think it's going back to 35. I do think it's primed to get 15, maybe 20, while still paying out a really good yield. Again, that is not financial advice. That is some idiot on YouTube making a guess. Okay? But I like AG&C, and it's low priced enough that we can pick up a good deal of it. O is also getting at a good value. I don't even remember why I had O at last time, but that would have been 2012, somewhere in here. And then the next time I had an account was up in Mass. Hopefully I didn't buy it on the high. Even if I bought it on the high, I would have dollar cost average. This would have been with M1 Finance here. This span from like 20 to 22. And then, was it, no, it wasn't 7, it would be 9. Like 9 to 11 was sharebuilder.com. Yep. Good old times. All right, but other than that, I went over the plays. I've went over me versus the S&P. Tools, portfolio rebalancing, top dividend stocks. Let's just take a look. Okay, we got some tracking here. Oh, dividend growth. Yeah. Okay. We'll be able to take a look and do some research. Nice. Yo, Diamond Energy, what have you been doing? Jesus. How many years? 6. Yeah, the dividend growth streak, that's how many years? Look at big bag target up here. Aristocrat heading to a king. Same for Genuine Parts Company. Yeah, we're not coming into these yet, but Aristocrats and Kings are definitely on the menu in the future. We got to build the engines, place the stabilizers. We've got Yield Max for the NOS button. And then eventually, we get these. And the reason being is that most of these have yields that are most of these are quarterly. Most of these have yields that would not allow us to really grow. Would not improve our buying power, I should say. They would definitely move up in value for a lot of these. Target's a really good company. I used to work for them. It was decent. But yeah, we'll definitely be getting into the better quality non-ETF stocks. But right now, we want to step on the gas pedal because I can only put in 500 or so a month. Yeah, guys, I did it again. 900 this month. I'm going to be eating ramen all month. Oh, it's rough. But it got us $2,000 since October 1st in the account. Boom, boom, boom. Done. My December, is right here. December 1st. Yeah, we already locked that in on the 29th. We didn't wait for the 2nd. Done. So yay us, 2,000 in the account. Anything else? We looked at cool tools. We got portfolios, we got goal. Oh, yeah, we do need to check on our goal. Okay. We were like, it was like, yeah, dude, your stuff's going to be done in no time. Your stuff's going to be done next year, is what it was telling us. Now, readjusted, it says our stuff's going to be done in 3 years. But obviously, we're going to accelerate that as we're coming in with the ulti. That's going to skew numbers up highly again. But not too highly and not too insane, and we shouldn't have the loss to just drop us to the 4 again. Does that cover everything for the weekend update? I don't want to miss anything because I don't want to be making another video on Sunday. Sunday is football. Sunday is football day. Got to watch my Browns. Win or lose, got to watch them. Yeah, I think that's everything. Okay, so it's been fun. It's even been real fun. Remember, the only team to be on with investing is Team Make Money. Not Team Buy and Hold, not Team Dividend, not Team Growth, not Team Options. We have all these tools. Use the right tools for the right situation. You know to diversify your stocks. Well, I'm here to tell you, you should probably diversify. Get comfortable, get good at a thing, but you should probably diversify the methods of which you make money with stocks. Because some things are better in bear markets, some things are better in bull markets, some things are better in stagnant markets. All right? All right, good. Don't get sucked into a team. Be well-informed. Make your own well-informed decisions. And it's been fun. This is the Climb to One